Alright, good afternoon everyone. I want to do a relatively quick video here talking about the swing trade stuff. Alright, so here are some suggestions for risk management for swing trades. Your stop should be 10 to 15% more than the bar size. Your break even, after hitting the bar size in profit, move your stop to break even. Initial target could be bar size times 1.5 or 2 or 3, whatever you want. The final target, as I'll show you, should be the next gray arrow when that triggers. I'll show you what that looks like, okay? So let's just start out with this. We'll move this out of the way. If you don't have anything on the chart like this, right, all you have to do is go to your indicators. If I've enabled it for you, go to your indicators and just put on the swing trade like that. All right, just click it and it goes right on. You don't need to do anything else with it. That's all. All right, so this is a 200 range NQ. So what I'm suggesting is if you get a trigger like this one, for instance, your stop is going to be 220, we'll say, so your stop's going to be up here. And once this goes 200 ticks into profit, which would be down here, you would move your stop to break even, which would be up here. Okay, so it goes right about here, move your stop to break even. Then when it gets 200 ticks in profit down to here, not 200, an extra 200 ticks in profit right here, you might want to consider taking profit. Now, the one thing I put in here, if you see right here, the final target is the next gray arrow. You can skip the initial target and just go with the final target if you want to. And basically what that means is you get short here and you stay in it until this gray arrow appears. Now, when the gray arrow is going to appear on the close of this bar, right? The first gray arrow is going to appear on the close of this bar. So what that would suggest is, like on this one right here, you get long right here on the open of that bar, and you close your trade right there. Right, on this one you get short right here on the close of that bar, and you get flat right there. Alright, on this one you would get short right here, and it goes all the way down here. Now if you did some of this risk management, you'd be out of the trade further down here somewhere, but if you just followed it until the gray arrow appeared, it would be all the way up here. Alright, so you'd be short over here and go all the way over here. I believe I did a count on that at one point. Let me see, I think I did it this way. Yeah. The other day when I created this, that some of you guys may have seen, this was the last one that I created. At this point, we had only been right here on this short trade right here. We'd only been right there, 48 ticks into profit. You can see it went down and down, but the one that I just showed you was this one right here. It ended up being 156 ticks, when it did actually go down here about 300 or 400 ticks. All right. I just wanted to point that out, because the risk management is up to you. But if you want to be in a trade for a longer period of time, you can be in the trade until the next gray arrow appears, right? So these are longer term things. Now somebody asked me, how long is a swing trade? Well, I'm using range bars still, but I'm using bigger range bars, and there's no time element on a range bar. So to make that tolerable, so you don't have to sit there and wait for hours in between trades, I created alerts on these. So to put an alert on, you go up here and you click on alert, you go here and you do the TIQ swing trade, and then you do any alert function call. Okay, once you do that, you can go in here into the message. This is a 200 range NQ, so I might just put 200 R NQ like that. Okay, and under notifications, I can have it notify me in the app. If I have it on my phone, it'll buzz my phone for me. I can have it pop up here over on the screen. I can have it send me an email. I can have it play a sound. There's all kinds of sounds in here now. Lots of different sounds you can choose from in there. And you hit create. Alright, in the message you have that. In the settings, any alert function call. Okay, any alert function call. If you have premium, it's open-ended. If you don't have premium, it's going to have an expiration date, probably 30 days. You're going to have to check on that. Okay, you hit create, and that's going to end up over here. Alright, this is the one we just created right here. Alright, the one we just created is right there. That's how you create an alert for it. Now, that is also going to give you an alert on the arrow, the gray arrows. It's also going to give you an alert on that. Alright, if you go in here again, and oops, not there. You go to alert, and you choose you choose swing trade right here. It's any alert function call. Alright, so any alert, and there's an alert on the gray arrow, there's an alert on the black arrow. Okay, if you do that, it's going to let you know when the gray arrow appears, or it's going to let you know when the black arrow appears. Now, the reason the gray arrow appears, let me just explain that. The reason the gray arrow appears is to let you know that the next bar is likely to be the trigger bar. Okay, if you have more than one gray arrow in a row like that, it's because it didn't close up, right? If I have a gray arrow pointing up, the next bar should close up. If the next bar would have closed up, it would have been a black. It would have been a black one. If the next bar would have closed up, it would have been a black one. The next bar did close up, and it was a black one. Okay, the black one being your signal bar. That's what you're looking for. Okay, that's how you do the swing trade. Now, I've said all that. Let's get rid of the swing trade really quick, and I'll show the midpoint stuff really fast. All right, the midpoint. I want to keep this video really short. We're in 5 minutes right now. The midpoint goes on the theory that the markets go up and down like that, right? So you want to get in when it pulls back to the midpoint. So when you look at a market like this is just a random, obviously just a random thing here. I'm not really trying to see, anything special about this. You put the TV trades on like this. Right now, within the TV trades, I have the long and short arrows, which are the blue ones and the red ones. I have those shut off. All right. I have these yellow ones on. The yellow ones are this right here, the trigger alert notice. That lets you know when the trigger goes into the overbought or goes into the oversold in the right direction of the color, right? It's going to give you one of those yellow arrows. That's usually the bar before an actual trade. Now, if you turn the trigger on, you see I have this midpoint turned on in here. The idea behind the midpoint is to let you know when it's pulled back to the midpoint of the last leg, all right? Now, the last leg is determined by two different things. Okay, the last leg is determined by two different things. Let me go back here and use this. When the background is red like this, when the background is red, it's when it comes out of the overbought, is when it starts looking for the swing high. And when it goes back into the overbought is when it establishes it. Alright, so what it does really, what that midpoint does, is in this case right here, it goes from here to here. Okay, so what the midpoint actually does is it says, okay, I'm going to take the swing high, the midpoint from the swing high to the last time it went into the overbought or oversold. So the midpoint's right here. Now if I turn it back on, you can see the midpoint is right there. The midpoint. That's exactly what it's telling you. It's telling you where the midpoint is, because that's what you want to trade off of. Now the actual trade, the way that the trade works, you want the midpoint to be flat for at least one bar before it triggers. You want to have this right here is a good example, where it pulled back up in the red, it pulled back up, hit the midpoint, and closed back down below the midpoint as it came out of the overbought. Alright, let me say that again a little slower. This is the whole trade. The background is red, you're looking for the pullback up to test the midpoint and close back down below it as it comes out of the overbought. Alright, there's going to be places where it'll test the midpoint and it won't come down immediately, it'll come down on the next bar, like this. That's perfect. That is the easy and obvious trade. That's what I've been doing all day long, every day. That is just a simple trade for everybody to do. Anybody can do that trade. It's super simple. Right here, you're going in the other direction because the background is blue. So you're looking for it to come out of the oversold. When the bar before, midpoint is flat, it closes above it, right there. Simple, right? It doesn't get much simpler than that. That's it. That's all you need to know, right? That's everything you need to know to make the same money that I'm making, with one contract, of course. But if anybody has any questions, you can email support@targetviewtrades.com. Those of you guys that are subscribed, you have my phone number. You can text me at my number. You can catch me up in Telegram. Any way you want to get in touch with me, get in touch with me. All right. Thanks for watching.